Hi, I'm Tim Brown, 2015 NFL Hall of Famer, and I am here with Danny Gardner, the Vice President of Affordable Lending at Freddie Mac, and we are here at the very first annual American Dream Home Ownership Initiative in Oakland, California. And Danny, let's talk about how the Tim Brown Foundation and Freddie Mac came together.
Absolutely, Tim. So Freddie Mac is really trying to increase its outreach to consumers this year. We know the importance of homeownership can change people's lives. And so we were really just trying to find a means of communicating that into neighborhoods at the local level. Fortunately, we got the opportunity to partner with you, in a very spectacular year for yourself. And you've been kind enough to lend your brand to this very important initiative, because we know a lot of people are being held back out there today.
Well, it's such an important thing to have home ownership, and I can remember the times when we didn't have home ownership as a family, and when we went to a home that we owned, how different my family was. How different my dad was. How he all of a sudden he cared about everything that was in the yard, where before it didn't matter. So I know that it was important just from that standpoint. And over the years, seeing so many families suffer from not having homes, I realized it was a very important thing. So we're very, very excited to be a part of this and think we have a great future together.
Yeah, that's fantastic, Tim. Homeownership is so important, and most people don't realize it's the primary way that families accumulate wealth over time. It's a simple way to build a nest egg and build equity, because you're having to keep a roof over your head anyway. So in the process, you can also begin to build equity in a home, which can be extracted to buy a bigger home someday, put your kids through college, maybe deal with an emergency like a medical situation. So we really want to promote the benefit of this to everyone.
Let's talk about some of the barriers that some of the people have to go through to jump over to get to this point. Talk about that for a minute.
Absolutely, Tim. So there's some basic criteria to qualify as a mortgage customer. First of all, you have to have appropriate credit. You need to have money for both your down payment and to make your ongoing payments. And lenders typically want to see a history of employment and income over a period of time to ensure that they're not putting you in a position where you may be buying a home that you can't afford or at some risk of losing down the road.
Now, I know when we talk about finances, it becomes a very difficult world to talk about. I mean, can you get into that a little bit, what everyone has to deal with?
Absolutely. So there are a number of options out there for homeowners who want to purchase. There aren't as many options as there once were, frankly, and that's not actually a bad thing. We certainly had a number of products in the past that were not in the best interest of many types of consumers. So there's considerably fewer these days, but all of them are oriented towards being responsible and putting people in a position where they can be successful. One of the big myths about home purchase is that you have to have a lot of money to put down. And the good news is there are a lot of products out there today where you can put down as little as 3% of the purchase price of the home in order to be a purchaser.
Well, let's talk about Oakland, some of the things they have to deal with here, particularly in Oakland.
Absolutely. So Oakland is a challenging market because it's very expensive to live here. Home prices are very high compared with other parts of the country. And as a result, we have a lower home ownership rate here in Oakland than throughout the state of California or the United States. Here in Oakland, the home ownership rate is only 40%. In the state of California, it's 55%, and nationally, it's actually about 65%.
How do we get the people to continue to come out? I mean, talking to so many people today, it was all about, I'm so afraid of this process. I mean, how do we get them over that hump?
Absolutely. Well, you're going to be afraid of anything you don't understand, and that's the whole intent of today's event. So we brought forward the Freddie Mac Credit Smart curriculum. Credit Smart was designed to give information to people and actually empower them so they don't have to be fearful of the home buying process.
We talked about the barriers and everything that the potential mortgage owners have to overcome. What are some of the resources that Freddie Mac brings to the table?
Absolutely. So Freddie Mac is an organization that's actually not very well understood by a lot of consumers. We're chartered by Congress, and our mission is actually to provide stability, liquidity, and affordability to the U.S. housing market. So the resources that we have at our disposal largely are around our credit appetite, our ability to put forward products that can help families of different financial situations. But we also have abilities to leverage relationships. Freddie Mac has a very large base of lenders. Many of them joined us here today. We also are linked in with hundreds of non-for-profit organizations around the country who can deliver information to consumers to make them more comfortable with the home buying process. And we also work with state and local government agencies, such as here in California, we have the California Housing Finance Agency, and they have very unique programs that leverage Freddie Mac offerings to provide even better benefits to customers, such as down payment assistance or lower mortgage interest rates.
There's a lot of talk about interest rates. How does that affect people in home buying?
Sure. So everybody is anticipating interest rates beginning to rise. We've actually had a very low interest rate environment for several years now. And given all the other factors in the marketplace, we mentioned the high cost of housing. There is a tightened credit environment, so it's harder to gain access to credit. So an increase in interest rates will only make it more challenging, especially for low to moderate income individuals, because the payments will now be higher as a result.
Yeah, you mentioned credit, and I know you mentioned Credit Smart, but people look at their credit and go, "Oh, I can't do this." But we're trying to encourage people. You may be 35 days, you may be 3 years out, but still get involved with the process.
That's absolutely right. Home ownership can be very valuable for those who are ready to obtain it. And the worst thing we can do, frankly, is try to encourage someone to take that plunge before they're actually ready. Credit is one of many factors that are involved in the mortgage finance process, but it's like anything. You have to recognize where you are, you have to establish a plan of how to address it, and then you have to execute upon that plan. And it may take you 30 days, it may take you 3 years, or frankly, homeownership may not be for you. But you know what? It's always a good idea to have good credit, because it's going to save you money in so many other different ways.
There's a lot of talk about credit scores. What's a good score to have, and how does that affect home buying?
Absolutely. So the credit score is a major factor that lenders take in consideration of whether or not to extend you a mortgage. Based upon your credit score, it may mean you may not get a loan or you might get a loan, but also, even though you are able to get a loan with a score, if you have a higher score, you're certainly going to get better terms for that mortgage. And a good credit score is usually above 680.